Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, February 1st, 2019. I was going to go through a few things here. I'll keep this video for members only because I want to cover both the stock market, talk about our recent trades, briefly hit on crude oil, and then all the precious metals and miners. That's gold, platinum, silver, palladium, and then we'll hit on GDX. So a lot to cover, so I'll just do a brief overview. Again, nothing's changed on the longer term outlook. I know for those of you that share my bias right now and are looking to position short or currently short for a pullback, at least a pullback in the markets. I want to say this, nothing has changed from the longer term perspective. These weekly charts, as I often say, can take a long time to play out their weekly candles. And so far, this is, what I'm looking at here. This is an entire bull market run off the 2009 lows. Here's our bull market uptrend line, QQQ, which is really where I'm focused. All the market leading stocks are the same ones in the top heavy and QQQ. So that's this point we broke that very significant important trend line off the early 2016 lows. We went down, hit the bull market longer term uptrend line, danced on it for several weeks, gave it up with a big red breakdown, big red impulsive candle, and we're back testing. And we're also back testing that key 40-week which is also the 200-day moving average. So again, nothing is guaranteed in trading, but as far from as a technical perspective goes, it doesn't get any more objective than this. The frustration is, the trend has been strong, but if you look at the trades too, and we'll get to those in a second, I'm keeping the losses relatively small. So we were stopped out on the recent QQQ trade. It was the first short trade I had added since this whole correction started back here. It was the first official short trade. Keep in mind, in the trading room, I will every day I'm going to post out, post charts on what I see, things that may be objective entries, developments. That's what I do. So, and I do see a lot of trading going on in there. I'm an active trader, but I just want to say, remember, try to check the over trading thing. That's probably the key to investing, especially if you're relatively new to this. If you're not sure what to be doing, don't try to follow myself or other traders. And again, I point out a lot of objective spots that may be short entries because that's what people are looking for. That's my job, is to point out what I see on the charts, whether or not I'm actually taking that, or whether or not it's the highest probability entry. So I just want to say that. And again, the takeaway from it is you don't have to catch every little move right now. Although I had a high degree of confidence recently that last QQQ short would play out, and I still think it would. I mean, technically we were stopped out. Let's talk on that real quick. Where was it? I already changed the lines because we had our stop. As if you recall, it was barely clipped yesterday. So had I had that on a closing or a 60-minute closing basis or daily closing basis, it would still be in play. Either way, neither here or there. Okay, I had to pause the video there for a brief interruption. So back to the QQQ trade. I just want to say this. And we were just stopped out. The stop was clipped. Now, normally I was busy yesterday. I spent the entire day and a good part of the day catching up to tons of chart requests, questions, support issues, and I'm all caught up now. Just on that real quick, remember, if you want to have a chart opinion or you have a question, try to tag your post in the trading room with @RSOTC. That's my username, and that will give me a notification. If you just say, Randy, what do you think XYZ? That may get buried down the thread. And of course, if I haven't gotten back to you now on any questions or chart requests or anytime this week or even before, let me know. Just bump me again, and I'll try to get back to you. Okay, so what I wanted to say is, if I had been watching yesterday, I may have revised the stop slightly or set it on. Sometimes I used to use this more often, stops based on a 60-minute candle close or even a daily close above a level. Either way, they got our stop on this one. And, they could get our stop on the next one, but I wanted to say this, that I would not add this trade back if the charts didn't tell me to. So again, it's not, trying to get revenge or I'm stubborn, stuck on this trade. If I had been away from my desk for a month and came back in today and I saw this setup here, just like I saw this one back here, I would add it again as a short trade. So these are what you can see is I've added, they're basically the same targets as before. This was T1 and T2. and we've had several reactions here. This is a high probability target. So if you're, what's happening here is the technicals are playing out. They're just not playing out for as much of a correction as I thought they would so far. What do I mean by that? Well, we had this bearish rising wedge pattern. We shorted within the pattern. We got it right here. We had a nice entry. It started to play out real nice. We came down, and I believe, if I'm not mistaken, I even had listed this as a support level at the time. And if I didn't, I should mention it certainly was, because there was a lot of reactions there, reactions back here, reactions. And so we hit that. Now, I didn't make that T1. I might have had that as S1, which means support one, where I expect a reaction. And we got the reaction, but what happened, that really contained the pullback. It was a little shy of the measured target. So that's what we're seeing here. The trend has been resilient. Measured target by that, if you take the widest part of a wedge, so let's just add it to here where we touch those lines, and right here, that's the widest part of our wedge. Tighten that up a little bit. There you go. And it's a very simple but effective tool. It doesn't mean every time you'll get that, and you take that to where the wedge broke down. So you can see effectively we did hit the wedge target. And so maybe in hindsight that should have been first target, but it just wasn't a lot. It was, what would we have been? We would have been about 2.5% or so profitable on the trade, if that, maybe 2%. And that's why I was expecting, and still am, more downside. So I want to say that. And at this point in time, what happened is we had the wedge hit its, basically its measured target and found support there, but we pushed up now. So what we have effectively, and this is what is, prompted me to add that trade back, among other things, I should say, but we have an even larger, more powerful divergent high. And I often say this, the scope of a correction is typically, not always, but typically commensurate with the scope of the divergence leading up to the trend reversal. So small divergence equals a small correction. Larger divergence would indicate a larger correction when it comes. So that's what I'm looking at. And if you recall back then, the one thing that I wasn't crazy about that trade is I love to see, and this is my go-to swing trading time frame, I love to see positive or negative divergence on both the PPO and the RSI on the 60-minute time frame. Back then I mentioned we did not have any negative divergence on the RSI. We only had a very overbought reading, and that's what I highlighted. So again, the trade, or the technicals I should say, did play out. Just my estimation or projection of where it would go after this breakdown was wrong. That's it. That's the only way you can look at it. So it was right on the pullback, but wrong on the scope of the pullback. And therefore we didn't hit my first target. You can see we had divergence there. All right, so that's that. And again, this trade, is based on, I'm also widening stops a little bit. I've talked about that quite a bit since going back to last quarter. I've been doing this many years, and the way I find price targets is I identify a level based on many things, based on the chart where I think a kickback rally may go. I look at overhead resistance levels, for example, on a short trade that should cap a kickback rally. And ultimately, I start with a 3-to-1 risk-reward ratio, meaning I'll risk $1 of loss for every $3 of profit that I'm shooting for. And then from there, I approximate I apply technical analysis and some other things to see if there's a level that should cap a bounce on a short trade. And then I'll set the stop a little bit above that. And for many years, that's worked. And I plan to do a video on this soon. I'd like to go through all the trades that were stopped out in the last couple months, because it's uncanny. And some of you might have noticed this, that not all, but nearly all of those trades were just barely had our stops run and went on to play out exactly as the charts had indicated, and would have went on to hit the targets. What that tells me is whether it's just general volatility in the market, whether it is, which I suspect a lot might have to do with the algorithmic trading programs, which are, coded by, many variables, and programmers put in code, and they look at where, that's what the stock market's all about. That's what the majority of trades going on in the market is, from program trading. It's not from individual investors like you and I. So it's these algos sniffing out, and they're smart. Consider it like AI, except people are writing these program codes, and there might be some AI involved. And so therefore, for many years, objective short entries, let's say for this example, on a bearish rising wedge, on a breakdown, people would short there, looking at targets, measured targets or whatever, and then a logical stop would be placed at, let's just say, our stop yesterday. for many years that worked, but if the algos see that that's where all the stops are placed, then they're going to gun the market up. And yes, they're run by huge firms that have enough capital to actually move the market. They can't completely control the market, but they can certainly cause, QQQ or the Nasdaq 100 futures to go up, a 1/4% or more than where they might have normally done by hitting it with big buy programs. And so I think that's going on. Whether my theory is right or not, what I do know for certain is the 3-to-1 RR stop, using 3-to-1 RR stops on technically sound trades is running a much higher failure rate. But yet, if I would widen that down, which I'm starting to do, move towards a 2-to-1 RR, because my success ratio, the trades have gone on to hit the actual targets. Again, a lot of loosen the stop a little bit for those trades that would have been stopped out. So therefore, if you have a high success ratio, much better than 50%, you can use a less favorable RR ratio, if that makes sense. So if you have a pretty lousy, let's say you're only right a quarter of the time, then you might want a 4-to-1 RR ratio, and that way you're stopped out on 3 of your trades. You get the 4th one right, but you made 4 times what you did on the last 3 that were stopped out, if that makes sense to you. Okay, enough on that. Let's just get off the broad markets real quick. I don't want to spend too much time. I want to get to the other stuff here. What we have is the trade today was based on a couple things here. I set QQQ, the official entry, to trigger on a stop below today's lows because that coincides, or will coincide if we get it, with a break below these uptrend lines. It's the ES. S&P 500 60-minute chart on the S&P 500 futures, that is. And we have, as you can see on the futures, clear negative divergence. It looks a lot like that QQQ chart I just showed you. We had a divergent high. Actually, on the futures, we had a divergent high at this point, right here, I should say, right about here. And then they popped that. They burned through the divergence, made a slightly higher high. So that actually took out the divergence. We still had it there on the PPO, but now we've gone on to put in a second divergent high, and so this is what I'm looking for: a break of both the ES S&P 500 futures above this trend line right here, which is also this rising wedge pattern. I think that will spark a pullback, as well as NQ. Let me pull that one up. Okay, here's NQ. I have it marked up a little bit different, but so you can see on NQ we have this we have a divergent high there. Relatively small, but definitely divergence, and we have an uptrend line. So again, this morning, right after the open, when QQQ bottomed, I put the short trade on there saying if we take out that low, because at this point, if we take out that low on QQQ, you're also going to take it out on NQ here. And being that NQ and ES typically move in lockstep, they will have broken down. So there's a lot of conditionals there, but I'm not going to make the official trades too confusing, saying that you need to see a break of NQ, break of ES, and break of QQQ. Because again, a break of the lows on QQQ should do the trick. Ideally, you want to see impulsive selling when it happens. That would help to increase the odds that your trade will play out, but this was the basis for that trade. One more thing to watch for that'll help increase the odds on this trade playing out is a cross down below the 0 line on the PPO for NQ. You can see the lines are curling up now, and we're still above that 0 line, keeping that trend indicator bullish. And again, it's a intraday chart, so it's for shorter term trends, not the long term trend. It was bearish there, and you can see that the NQ was in a downtrend. Bearish there, and NQ was in a downtrend, a sideways trend. For the most part, we've had, and I've talked about this, the market has largely been moving sideways for weeks now. So you're going to get these whipsaw signals that don't lead to very long swing trades. And I've always said, stay away from trend indicators during sideways markets or anytime a security is trading sideways like this right here. But a lot of times you can capture the big trends, and that's what we're looking for here. So if we can get a break of that, some impulsive selling, that may open the door up for a nice move down. And NQ traders, you might want to look for, I can tell you right now, a solid support level is right about here. You can see that line. That's where I think we'd come back down to, and that is, I have 2 lines there. Let me remove one. 66.32, give or take. And to try to quantify it for you from where we're at now, grab that down. That would be about a 3.8% drop from where we're at right now. Okay, moving on to USO. I won't spend too much time on it because USO has traded very highly correlated to the stock market recently. So I'll probably do the same. And again, we get those sell signals on the futures and QQQ and everything else. We'll probably see crude follow, if not right away, especially if you start to get some impulsive selling to the downside. So consider those a pretty highly correlated trade right now, meaning if you take one, if you short crude oil and you're short the market or long either way, and then you have some concentration there in your portfolio. You're not really diversified. So just adjust your position size accordingly. And there are times where two security or two asset classes have a strong correlation, and then all of a sudden it disconnects. So it is possible for one to go up and the other to go down. Now, with that being said, this is a weekly chart of USO. This was a very powerful and strong and very technically significant multi-year basing pattern in crude oil. You can see that going back from about the beginning of 2016 all the way through. We finally broke out around the end of 2017, early 2018, back tested, and boom. And then you can see there, technicals on crude play out pretty well, especially the long-term stuff here. You have this price channel. You had a divergent high that said, okay, that was it. Crude ran into a very significant level. I pointed that out at the time. And then boom, just a non-stop bloodbath of a sell-off in crude. Now, where are we at now? Well, this was resistance for many years. Once broken, it became support, as resistance does, and that's how technical analysis works. And there's not any reason that it shouldn't be resistance again. We're a little bit below it. It's about 1193. Maybe we get there, maybe not. But again, the way I see it is same with the stock market. The upside in crude, I believe at this point, is very minimal. So for swing trades, I'm keeping the, stops on the official trades commensurate with these swing targets, but I'm also looking, there's a big part of me that is very open and willing to the fact if this is a bear market rally in both the stock market and crude, there's a lot of downside here. So I'm willing to give my swing trades on some accounts. I have different accounts, different targets. Some are longer term trades, some are quick tactical short trades or long trades, but I'm willing to give it a little room because I see very little upside right now. The risk reward to me is clearly skewed to the downside in crude oil and equities at this point. And even if they don't go down very much, they have so much overhead resistance that it would be very hard to see, especially as overbought as they are, to see them continue up another, crude, for example, or the stock market another 10% without, at minimum, some more consolidation. Daily chart on USO, it's that same resistance level I just showed you on the weekly. We're just zooming down. You can see this level here, this level here, this level here. We're actually there when I look at the daily. So this is what I'd go off of, and I am going off a little bit more. 1166. That is a very significant resistance. It has acted as resistance for the last couple of years. It was support when tested after that breakout, and it was support on the first tag here. We bounced, and then boom, gave it up with a big red candle. Tried to get at it again the next day, you can see, and then that's all she wrote. So this is at best, if this market's going to new highs in 2019 and crude is going higher, then what we could be looking at here is an inverse head and shoulders pattern. As you can see, I'm drawing it out. That's a bottoming pattern. This would be your neckline. This would be your left shoulder right here, your head, and your right shoulder. But that would entail a pullback here to form a right shoulder. So it's just one potential scenario. And that would also line up. There's some pretty nice support there. Coming in around this area here, there's a gap and everything else. So this would be, let's just call it my most bullish outlook or bullish scenario for crude is to come back, pull back, put in a right shoulder, and then go on to ultimately break out. And what would that entail? Well, from that 1166 level that we've been kissing, come back in the top of this gap, that's about an 8% pullback in crude. So again, there's a good chance I'll put on another official short trade and, let them take us out. We kept our stops tight. We've had, small minimal gains, losses, 2% on the last USO trade, a little over 2% on crude oil as well. QQQ. I think it was 2.4% loss on QQQ and not much more on the DWT trade, if I'm not mistaken. And finally, 60-minute chart. When I zoom into the 60-minute chart, I'm seeing a nice, clean rising wedge. I see clear divergence. Look at that negative divergence there. Yeah, and we had divergence right here, just like the QQQ chart I was showing you a minute ago. We had divergence. It's not that the divergence didn't work or play out. There was a pullback. It's just that we kicked back, and sometimes you get that. So I had this smaller wedge. We broke down, and we've just now moved higher to put in an even larger divergent high, which would indicate an even larger correction from this point. Really the same targets, just like the market that I was looking at back here when we had that divergent high. Just now, if we fall from a higher level and those targets get hit, there's a big old gap, a very good support. This would be my minimum target for USO right here. And again, to quantify it for you, let's just say that's about 8%. So that aligns with what I just showed you on the daily chart. No sell signals yet. Again, we don't have the sell signals in the market. Nothing remotely close to a sell signal on crude, but I will be watching, and we may get that soon. And if you want to take a shot at it, I can tell you this: it's at resistance, and I showed you that on the daily chart. So sometimes I will take a trade early without a sell signal, but because a stock is rallied or a security into resistance, solid resistance, with divergences and things that indicate that a trend change is likely. All right, now let's move over to gold. We closed out just recently. We hit our final target on the gold, the long-term trade. That's a trend trade. Remember, there's if you check out the swing trade, the categories of trade ideas, I have basically two categories: swing trades and then long-term trades, which are also trend trades. So we had gold. We entered it as both. I stated that clearly back here when we bought it, swing trade and a trend trade back here. And we hit our first target pretty quickly. Second target, that was my final target for the swing trade, and then said that we'd keep the long-term trade on because the longer-term outlook still looked good. And so we hit that just recently right here. Now, as I said the other day, I can't make a strong case to short gold or GDX. Sometimes at my final targets, I will reverse a trade quite often, especially if the charts confirm. But I can tell you this: somebody asked today, Randy, is a good time to short GDX. And I'll go over the charts there. I can't make a very strong case to short GDX based on the charts, but I can tell you this, that gold, I can make a decent case. There's a big confluence of resistance up here. You can see that this sideways trading range right here. And there's a few different support or resistance lines. And you can see we hit my uppermost line. It's very muted here. Sometimes on the YouTube channel, if your monitor's not bright enough, you might not see all my lines. I'll turn them down or turn them up depending on whatever reason. But and I can add some other lines here. I don't want to complicate this chart, but let me move this line down right here. All right, so now what I'm looking at is, here's what stands out to me. We've run into resistance on a very overbought, overextended run, meaning the RSI you can see is above the 70 level, overbought. And not only have we made an extended run into resistance, but we also have done so now with potential. Not confirmed, but potential negative divergence. If gold continues lower from here, you're going to have a bearish crossover on the PPO. That will give us negative divergence, just like we had back here and back here. That led to this drop and this drop. Not expecting that large a drop. I remain longer term bullish on gold. However, the risk reward right now, in my opinion, is skewed to the downside. So I'm out of this trade. We closed out the official trade. Here's what I think will happen. Pull back here, come down, hit this trend line. There's an uptrend line as well as a 122.40 support. One may come in above or below the other, but either way, I'm looking for a pullback to probably about that 122.40 level. And from the recent highs, that would be a drop of about 2.8%. So nothing big. Not enough meat on the bone for me to want to short gold. I don't, if I take a trade for targeting a 2% profit, and that was from where it was yesterday, then I have to have a stop of about 0.5%, 0.75% or so, and it's just not, worth it. I try to fry bigger fish than that. So again, I'm not interested right now in shorting. But if you do have a 2% pullback in gold, that will probably cause the miners almost certainly to go down with it. Again, I can't make a strong case. There is some potential negative divergence on the PPO here on GDX, but you won't have it on the RSI, but you are overbought. So that in itself, sometimes an overbought reading will, trigger pullback, you can just go back on your chart and look at what happened. This was a divergent overbought high. You had 3 consecutive lower highs with each of those overbought readings did give you a decent pullback, and it doesn't look like much, but here I'll measure it out for you. Even let's say this one from the highs when we were overbought, GDX pulled back 5%. That's 15% nugget, but guys, be careful with those dust and nuggets. There's a lot of traders. I use those strategically if I suspect a very strong and unidirectional move, because then the 3-time leverage works in your favor. You don't want to go long or short dust or nugget during times like this. The decay will eat you to pieces. This is when the decay is horrible, when GDX chops around like that. You want to try to be very selective and get in these unidirectional rips and dips and then get out. Otherwise, the decay again will eat at you, and that's all talked about in the FAQ page. Okay, and of course, GDX has a lot of gold. It's the gold miner ETF, but it also has a lot of silver mining companies, and some of those companies, bring both out of the ground, silver and gold. So you want to watch silver. Silver, I can also make a pretty decent case for a pullback. This is a key level to me right here, 1527. I'm marking all the reactions that we've had. There's a trading range, a lot of reactions there. So silver essentially has rallied up to a significant resistance level, maybe a hair shy, but remember, this is the ETF, not futures, so close enough. Also has negative divergence, which will be confirmed soon on any more downside. And again, I'm not keen to short it. I think we get a pullback here, but you have pretty decent support there. I think we'll probably come through that support, hit this downtrend line. You have another big gap right there, as well as some resistance. So again, same story. I'm looking for a relatively shallow pullback. If we get more than that, and I'm fine, if I don't catch it on the short side, I will certainly be very interested in going long silver and or the miners, which I typically use in my proxy. If silver were to pull back all the way here to the 14 level, that is golden. That is the top of the basing pattern right here. This is what you look for in TA. This is a bottoming pattern, a basing pattern. Look at all the reactions, boom, 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 and then we didn't just limp above it. We broke out impulsively. There's nothing more impulsive than a gap up and then never looked back. That is impulsive buying pressure. That confirms a breakout. So you had the initial leg up, kickback rally, and another thrust up. And so really this is longer term bullish. This isn't just for a quick swing trade. If we happen to come in and test that from above, no guarantee 14 will hold, but that's an objective long entry. You buy, scaling, I wouldn't wait for exactly 14 and start buying a little early with a stop somewhat below, because sometimes they like to run the stops, take you a little bit below, and that's an objective entry. Now, you may not get that, but if you do, and the charts confirm at the time, that would be a great entry or add-on for silver. Palladium's been on my radar lately, quite a bit of posts from myself and others in the trading room. You have this price channel here. This is PALL, by the way, guys. This is the ETF for Palladium, the most liquid, popular one. And we had a minor trend line here was broken. We had what appears to be topping action. And I like to confirm the charts with Palladium futures, but because the futures trade around the clock, the ETFs will just trade during regular hours. But there's a big bearish engulfing candle. That's a pretty solid topping pattern there, and it's also an island cluster top. By that, you have these two candles are separated, so they're an island, if you will, separated by a gap on each side. So you have a bearish engulfing and an island cluster top. Doesn't get much better than that as far as topping patterns. Now, it would be a little better if that was a stock, because again, Palladium futures trade around the clock, so you're not going to see island clusters because of the round the clock trading. But again, it looks pretty good, and the way you trade that is the easiest way to do it is just look at the island right here, those candles, and we should remain below that. You could give it a little room. They might want to run it up in there, but this one you can take a short here. It's a little premature because you haven't broken the trend line, but you can short there with a relatively tight stop, maybe half a position add on when the trend line breaks, because you do have confirmed negative divergence. Palladium has had a heck of a run. Targets, I didn't have this chart marked up, but here's first support right there. that needs to go. That's not enough to give you a price target. Ultimately, I think Palladium will pull back to right here. So let's just keep it simple. There'd be a little reaction right here along the way if you want a shallow target, but I think 107.70 is where Palladium comes back into. And then finally, the last of the precious that I follow, PPLT. This is actually an official trade idea and has been for quite a while. Story on this one, if you're new to the site, relatively new, I should say, since the memberships were shut down. We went long. I don't have it marked here. Somewhere back here, we quickly hit our first target, and for all intents and purposes, would have hit the second target. I had messed up on this one. I had set T2 at 83.40, too tight to the actual resistance level. I had 83.49, and we came in within just pennies there. We just missed that target. Actually, I had it set where I thought it was right. I was 9 cents below the actual resistance line, and we just happened to miss it by high of 83. I have to get it right on that candle. The high that day was 83.11. Yeah. So yeah, we fell a little shy. Either way, we never hit the stop. So this is just one of those trades. I didn't take it off. I debated, I contemplated, and I even pointed out this trend line at the time to watch that. If it broke, which it did, that would be a sell signal. So, if you're a long-term trader and you're at the entry, you're still profitable on this trade. We never hit our stop, and it actually looks better than all the other ones. Silver, gold, and palladium that I just showed you have had very strong runs. Platinum had a strong run early, but it's already corrected. So of all of the four that I just covered, this is still my favorite, and that's why I'll leave this on as an official trade now. If the other one's correct, maybe this one does, maybe not. You can see lately they don't always match to the same drum beat or march to the same drum beat. Anyways, that's platinum. And then GDX, we'll wrap it up here. It's been a long video. GDX, yeah, did I already cover that? I don't think I did. Sorry, guys. It's been a long morning. I've had a lot of catching up to do on the questions on the site, and then some other things I have going on. That's GDX. Pretty much hit resistance. I have a line here. It's not super well defined, but I do see when I look at that level, a lot of reactions on and around it. And so I think it was a significant resistance level, and that's where we ran into. And so far, that's capped the advance. And most importantly, GDX, with very few exceptions, will follow gold. So you just have to get the call on gold right. Even if there's a temporary disconnect, the miners will follow. So while I can't make a screaming case to short it here, even looking at the 60-minute chart, I don't see what I like to see, which is negative divergence on the 60-minute as well. Wrong trend line here. Let me try to do that again. Here's a trend line to watch. Not super well defined. Again, these are the reasons I'm not crazy about it, but if you ask me, and I made this comment to somebody, they asked about shorting it. Do I think it'll go down from here with minimal upside? Yes, because of my outlook on gold and silver. But on this chart alone, I can't make a very compelling case to short. I have a little bit of divergence there on the RSI. I do not have divergence on the PPO. So maybe one more thrust up, put in a divergent high, back test this trend line that just got broken. That would certainly look good. It will look something like this. Here's your divergence. Extend this divergence on the RSI, and where would it be going? Right about here would be my minimum target, and that would be from where we are right now, about 4%. So, but again, if you get in, use nugget or dust, and this thing chops around for a while or moves a little higher, that's going to work against you. So, in my opinion, if you have the capital to do so, I mean, it's not proper position sizing really, but I was going to say take a short 3 times the amount of GDX than you would purchasing dust, and you have the same exposure, but you don't have the decay issue going on there. And again, there's the reason why the decay works on the 3 times and not on the individual ETFs. So you can read about that in the FAQ page. But all right, let's wrap it up here. That's plenty. And before I do, I'm just visualizing a trend line that is probably going to come into play here at some point on the correction. So I told you a second ago, that would be my minimum target. And at this point in time, this is what would be my max target. And I think a good level to cover if you're willing to give it some room. And that would be, again, the uptrend line off the, November 12th lows. Here's your reactions. And just replicate that on your chart using log scaling, not arithmetic. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.